Joining us to break down the trade and what other factors could influence prices is Phil Streible. He's the chief market strategist at Blue Line. Phil, I have kind of like a running gentleman's bet with a friend in town about which way nat gas goes from here, because he says based on seasonal patterns, and he would know in prior winters, this is going to be a really cold one. These prices are going to go much higher. You add in the AI demand on data centers and all the like. What do you say about staying long the nat gas trade here?
Yeah, I mean, I really like nat gas over the long term. I mean, nat gas prices, they are dropping primarily due to an updated weather forecast predicting milder temperatures across the U.S. from the mid to latter part of the month. It's easing some of those concerns about the heating demand. Seasonally, this is a time of year for heightened volatility in the market. It reprices itself in response to the rate of change on supply and demand. If you look technically, going on a longer term scope, August, September, October, natural gas traded between $4 and $4.50. It was November 5th breakout that ran it up to the $5.50 level. And now that $4.50 breakout level, which was old resistance, should define itself as new support. But back to what you're saying, we've got the high production levels. So the near record nat gas production averaging about 109 billion cubic feet per day in December. What happens is high prices drive more drilling, more supply. Then you get a shift in the weather model. It pushes prices down rather violently, like what we're seeing today. But one more thing on the long term, that demand natural gas's role with AI. Natural gas creates electricity for the grid primarily by using chemical energy to spin a turbine connected to the generator. So many tech companies and data center developers are building their own dedicated on-site natural gas power plants that supplies almost 40% of all the electricity in AI centers. So long-term prices heading higher. I think the floor is being risen, but short-term volatility with weather.
Yeah, it could be 35 degrees below the average in certain parts of the upper Midwest. I mean, that is super cold. All right, let's switch gears to oil and ExxonMobil, Phil, because ExxonMobil issuing some new longer-term guidance today. Didn't get a lot of attention, but it is now. ExxonMobil effectively raising its outlook. It now sees earnings growth and surplus free cash flow by the year 2030. It is raising both by about $5 billion basically over the next 5 years. ExxonMobil CEO Darren Woods writing, quote, "Our transformation helps ensure that in any future market environment for decades to come, ExxonMobil will have an important role and deliver substantial shareholder value." And they kind of see Brent crude around $65. Phil, the market clearly likes the news. Exxon shares up 3% today, and it adds to a pretty good run for big oil and stocks lately. Even as the price of oil itself stays flat or goes down, why are we seeing a divergence where the stocks are going up, like the XOP ETF is up 4% this year, while oil is down 2%?
I mean, they're just becoming much more and more efficient here. A lot of these companies here, they're in a positive environment at the moment. And yes, oil prices are going down because the persistent role of global oversupply, weakening demand on the outlook here, concerns about the Chinese economy. But the reality is those affect the global oil prices and the global profitability of individual companies. I mean, we've seen restored production here in a key oil field in Iraq. That's why prices have fallen about. We've got about a 1% decline here today, but the expectations of the supply glut are really currently outweighing those geopolitics, and a peace deal between Russia and Ukraine could increase supply by about 2 million barrels per day. If you look at oil by itself as a commodity, I think resistance 60 to 61, support 58, we break there. We're probably going to retest those lows, but a lot of these companies, they're just getting better at what they do, and that's what's helping support the individual consumer as far as companies concerned.